This episode is presented by Edge. Edge is our pro-to-pro advisory service, which is all about the macro with the focus on one-to-one engagement with portfolio manager and Edge economics advisor, Geoffrey Fouvry, and derivatives advisor, Hans Albrecht, as well as a direct access to LaDuc trading founder, Samantha LaDuc. For more information about Edge, visit www.laductrading.com/edge.
Why was the yen moving higher yesterday? It was this reason. And Geoffrey, in taking a look at this, and he's got to dig into this a little bit more, and he will be writing up details on it. Long story short, he says it looks like Silicon Valley Bank on steroids. And this is definitely a big deal, I think, as it relates to the yen carry trade. But I will preface it by saying we have to wait here because the market, you can see right now, oil's a little bid, yields are chopping, gold just got tapped back down with dollar, market sideways, et cetera, et cetera. We've seen an enormous amount of VIX calls coming in, and perhaps they got the nod on this the past few days. But we're looking at the dollar yen dumping below that 152, and that is totally expected. I am bearish the dollar yen as the 10-year JGB yield pushes even higher. This is what's going to upset the apple cart. So even though the market looks like it wants to break out higher and get chased, I'm going to be watching this very closely for a big move very soon. And it will likely be on this Japanese bank as a trigger for more yen strength. So this is a situation where it has not triggered yet, but I believe that we do have a reason in this bank that is literally a situation where they have not just unrealized losses, they've crystallized, it says so. And we had a situation back in July where it was a currency situation. In other words, we had FX volatility that forced the yen unwind to then translate into equity selling. Remember that? And NASDAQ fell 15% in 1 month. Semis fell 25% and NVIDIA fell 35%. Now, this has not erupted yet. It has not moved, but it's going to. It's kind of like that Airbnb. Once we're in a squeeze, we're going to have a big move. It's not a question in my mind if, it's when. So direction matters, obviously, but we got a rate differential here that's playing out, and that it could be very supportive for the yen. And if it's very supportive for the yen, which you know what happened last summer when the yen got going, it's going to be a much bigger deal if this bank is forced to offload their sovereign bonds. Now remember, they own a lot of these bonds. That's the yield. They own a lot of JGB government bonds and US treasuries. So that would be a situation where they would be forced to sell it because they have a bank run. So this bears watching. We didn't have this yesterday. I didn't see it. I didn't see it until after hours, because this really could be the reason why the VIX calls have been coming in and getting absolutely peppered. So this is a yen carry trade unwind if this bank is forced to offload sovereign bonds because they have a deposit flight. So that's, I believe, while the VIX has been getting accumulated. So we got to watch that. That's a yen carry trade part 2. This is very clear. Dollars going down as yen rises. That's your trade. That to me is very clear. This rate differential means, for those who do currency or related macro stuff, yen is rising as the dollar falls. That's the trade. It could be slow. It could pick up speed. If it picks up speed, it's a yen carry trade unwind that triggers volatility, that triggers de-risking. That is also coming somewhere down here fast. And if it starts to pick up speed below 148, we're going to come down to 145 of the dollar yen. We start to come down to 145, which is exactly where I see it coming. That yen's going to be higher. Bonds are going to be higher. Oil's going to turn south is my bet. So oil turns south with equities. Then you got a yen carry trade unwind, and that can pick up big volatility. And that's why I think they started to position with those VIX calls, just directional of size in March 23, 24, 25. They're massive. I am worried about the market because of the 5 reasons that I talked about before, which are posted, remember, on whatever it was, Monday. And specifically, I'm like, okay. And I updated this yesterday going, okay, a 6,100 is definitely support. We know that. And if you get above that kind of 6,150 area, dealers that have sold heavily into, they've sold into that 6,150 area. So if we get above it, we can have a gamma chase higher, a squeeze higher, but not today. Today, we've got my rate spread for US, Japan rate differentials are absolutely favoring the bears, which I talked about a few days ago. And this is the JGB 10-year spiking higher. But it is particularly, I think, predicated on the fact that that Japanese bank I mentioned is in serious distress. This is not just unrealized losses on their Japanese and US bonds. Their balance sheet is an absolute mess. It is crystallized losses. So how they have to get out of this is to sell. Will this create, it has already created a bank run on their bank. Will it create collateral damage on other bank balance sheets that then have to sell? If so, this will be much worse than the July yen carry trade unwind, which was very, very isolated to FX. This will be FX and sovereign bond bank run driven, very different. So that's a bigger threat, but it's early. This just came out yesterday. VIX calls have been accumulating in March of size. I would give this 3 weeks to kind of be showing itself. And the yen specifically already triggered yesterday news of the CEO resigning after major bond losses, which have been crystallized. They're not unrealized. So that's a big difference. That's a big change. So I would give this time, but for right this minute, you can see how that rate spread I just highlighted has fallen. And I would also remind that this is another area where VIX looks very perky after Wednesday with large VIX bets hitting. NFP next week will be a thing. I think that's going to be a big thing. And I think this is also the differential that I talked about is a big deal because it is falling. This is the one right here. VIX is actually falling while SPY was rising. I said, no, that doesn't work. And then of course, my yield curve 10 and 2-year has not taken off, but that would be another headwind. And then basically Mag 7's looking a mess. Those are the things that I had posted already that I was kind of tracking. And more importantly, if you're short, press short. I said, don't be worried about the dollar falling. The dollar falling is as advertised. That's the plan. The problem is if oil starts to roll over with yields, then we're going to have more yen carry trade triggers. And right now we still have that TGA underneath the market, which is supportive or ballast. So every pullback is getting bid back up. It's getting supported. But I think we're going to have a different market in a few weeks. So that's why I am focused more so on where this triggers the 10-2-year. I think it looks like a steepener. This, as I mentioned, ballast keeps the market supported. We haven't gone anywhere fast with Mag 7 as the ratio, but this is falling and this is going to continue to fall. And this is the dollar yen. So yen will rise relative to the dollar. Dollar will fall relatively, but it's the rate of change that is what triggers a de-risking. And that's what we don't have right now. What we have is weakness right now intraday, but we don't have. Most of that was on comments yesterday. So Trump has initiated as of April 2nd, another 25% tariffs on lumber coming from Canada. That's why XHB is a short. That's why HD is a long. Trend is I'm taking off, that kind of stuff. Also, we'll see about the IRS getting dumped, but NATO, if US withdraws from NATO, there goes the need to even forge a peace deal or armistice. It'll just force victory for Russia, period. It'll be done. And anyway, that's to be determined. The other thing, of course, is the drama right now that I think bears watching of volatility triggering from a sovereign bond duration shock. And that's more than yen carry trade unwind. So that definitely bears watching. But for right now, it is just a rate spread differential dump. And that is what's causing, in my firm belief, the market to roll over. And as long as this is falling, the market will roll over because yen is rising. That is going to be a bigger risk. But right now they don't see it. But this is exactly what I saw. So that's where the market gets a little bit tricky because as this picks up speed, the de-risking in NASDAQ especially, which is the basis trade, will pick up speed. So yen carry trade unwind is related to basis trade unwind. This is also a differential that's telling me more weakness. The market doesn't know it yet.
Subscribe to LaDuc Trading YouTube channel for more macro to micro power hour videos and other content.